Mr. MK Surana, former CMD of HPCL on the show. Mr. Surana, great having you. Thank you so much for taking the time out and being with us. How do you foresee the to and fro's for oil marketing companies in a scenario as uncertain and volatile as it is right now?
Good morning, and thanks for having me on your show. As far as the crude prices are concerned, we are slightly in an uncertain territory right now. It depends on how Iran reacts to the situation which has developed on Sunday. And the two possibilities we should concern is one, closure of Strait of Hormuz. Second thing, if Iran retaliates with some action against the other oil-producing assets or storage assets. While generally it is believed that the possibility of both should be lower, in spite of the fact that yesterday Iran Parliament has approved a closure of Hormuz, but subject to their Supreme Leader's assent. But I'm sure that US would have considered this scenario before taking the action which they have taken. Now, in the current scenario, the crude oil, which is running right now at $78 or so, I think, as I mentioned earlier also once on your channel, that till $80, I don't think that there is likely to be any change in the prices. And if it goes above $80 only, there is some thinking maybe there on that issue. And of course, the reduction of the excise duty remains as a tool with the government. As far as oil companies are concerned, if the market prices are not adjusted to the international prices, it will have an hit on their margins, especially the marketing margins. But in past few months, the marketing margins were good, so they will have a little bit of leeway to play with that temporarily, not on a long basis.
Got it, sir. Sir, one question. I mean, the last couple of quarters, it was expected that the marketing margins would inch up higher and that will take care of the profits. But of course, there were inventory losses maybe. And it was believed that now that 2 quarters have passed, the inventory losses would be behind companies. And predominantly, everybody highlighted HPCL. Even today, brokerage notes are talking about HPCL being the key beneficiary as well. My question to you is this. Would 15-20 days of an oil price move above $75 per barrel really hamper the overall profitability for oil marketing companies, or one needs to look at the average for the quarter? I would presume it will be the averages for the quarter.
Actually, the inventory gains or losses depend on day-to-day, actually depending on the way the pricings are determined. So pricing is determined with the rolling average of 15 days on day-to-day basis. But because the marketing pricing are not moving in line with that, so that differential basically adjusts the profit, and that profit may be part of two things, either the inventory gains losses or the operational margins. So as far as the marketing pricing, market price is not being adjusted to the crude prices, it will basically be whether we have got inventory gains or loss. And I won't think that 15 days will make a great difference unless there are huge spikes and downs. If it is a gradual thing, if it is a continuously increasing, then you may get the gains. If it is continuously down, you may get a loss. But if it is up and down, it does get adjusted to that extent. And right now, we are in a volatile market to that extent.
Said that, Mr. Surana.
But it will also depend on what the prices you have on the closing of the period, that is the quarter ending or the year ending.
Okay. Having said that, Mr. Surana, oil marketing companies have had a cushion for quite some time because excise duties have not really been tweaked in line with where crude prices have been going. How long does that cushion last in your view? And at what level will there be a significant change to the pump prices, if at all?
No, we need to also consider that there may be cushion in MS and HSD, but we have got under recovery in the LPG.
Yeah.
So if you see, we need to see the integrated margins of the companies, and there is an accumulated loss on the LPG. So I would think that that cushion is slightly a metaphor, rather, to say to that extent. Unless the whole of the LPG under recovery is recovered, I won't see that cushion exists.
Yeah, the cushion is thinning out, if we have to take that metaphor forward. Having said that, just on the petrol and diesel part of it, at what point do you think that the needle moves on pump prices, or we're far away from that portion?
I think we are far away unless there is a substantial change in the ground situation which leads to closure of the Strait of Hormuz, or there is some action which affects or impact the oil marketing oil companies' assets in the surrounding areas. Which both the possibilities I see slightly less likely right now, because there will be an impact on Iran also if the Strait of Hormuz is closed, and also the other regional players who will also try to ensure that the Strait of Hormuz is not closed, and it has not been closed even in the worst of the scenarios earlier. Second thing is because the nearby countries have at least spoken in favor of Iran, I don't think that Iran will try to attack any of those assets in the nearby and create a further negative narration. And the third thing is there is always a possibility of an retaliatory action if the Strait of Hormuz is closed by the people who get affected, including US. So I see that we may see a little bit of uneasy calm for some period in which the oil moving between 75 to 80. Depending on the news, it may go above 80, come down below 80. But the possibility of it crossing three-digit figure is only in case of the Strait of Hormuz is really closed, not said to be closed.
Okay, really closed and said to be closed is the big differential there. Just, your take, Mr. Surana, on India's needs, and just let's pull out from just HPCL right now, because you have that amazing perspective. In terms of India's needs, alternates already exist from Russia, etc. How vulnerable are we to all of the geopolitical tension right now?
See, there is a substantial amount of oil and LNG which flows through Strait of Hormuz. So it is not only a question of, because the oil is an international commodity all said and done, and if there is a shortage of oil in the world, the prices will go up. So supply-wise, I don't see that concern because there is a surplus capacity available in the world. And fortunately, India has diversified their sources over a period of time. And while we are still dependent, but less dependent than earlier on the crude which is passing through Strait of Hormuz. But if there is a blockade at Strait of Hormuz, then definitely there will be a sudden spike in the crude price, and that should be worrying to us as well.
Okay. Mr. Surana, one final word. I don't know how much of a liberty you are at to speak about this, but just judging from the capacities that you set up HPCL to build out, right? And now everybody is recognizing that and talking about how earnings for the next 2-3 years could actually be good. I mean, ceteris paribus, oil prices behaving themselves. You reckon from your vantage point that the earnings strength for an HPCL or some of the other oil marketing companies, but HPCL in particular, could be very strong in the next couple of years?
The HPCL has taken actions to increase their capacity, strengthen their product portfolio, and diversify their product portfolio. And many of these projects are coming to fructification. Some have already commissioned, some are going to be commissioned soon. So HPCL definitely have got a trigger point for building up their profitability on that. And if it is coupled with the good refinery margins, I think that HPCL will be beneficiary of it. The second thing is that if the crude price, normally we believe that the base range is 60 to 65, and all the risk premium which are built in to take it above 65, it goes down over a period of time as the tension settles. Then I would believe that all the oil marketing companies should be a beneficiary of that, and HPCL more because of the projects which are coming to fructification now. But that's my personal opinion.